Hi, everyone. I'm Sheila Patel, the co-chair of Antler's board and vice chair of B Capital. Welcome to the first session in Antler's Window into Progress digital series, a chance for you to take a closer look inside the world's day zero investor. With offices in 25 cities across 6 continents, including a new office in Minot that recently opened, and a fast-growing community of 6,000 founders, Antler is an investor with a unique vantage point. Working with founders from day zero also means it is able to spot emerging entrepreneurial trends sooner. Today's session is all about the state of building today. I'll begin by sharing some perspectives on the state of VC today. Then we'll move to Magnus Grimeland, Antler CEO, who will then share thoughts on what today's landscape means for Antler. You'll then hear from Antler partners leading Antler locations in 4 regions. Dr. Christoph Klink in Berlin, Tyler Norwood in Austin, Rajiv Shrivastava in Bangalore, and Carolina Strobel in Sao Paulo. They'll each share an update on trends they're seeing in their corner of the globe. We'll then open the floor to Q&A. We've already had some questions submitted, so we're really excited to start answering questions, and we'll get to that as quick as we can after the initial comments. But please be sure to post any other questions you have in the chat, and we'll be watching that and ready to take them on. So let's get started. As I look at the state of VC today, we obviously have been through some incredible times. If you look at where we were the beginning of 2022, what we went through in 2022 and the heightened beginning of 2023, we've dealt with continued instability around the world, stubborn inflation rates, several high-profile bank failures. We've had ongoing, in the midst of that, positive macroeconomic indicators that contrast that message. We've had some good GDP numbers, particularly in some of the developed economies, excluding the UK. We've had great news on unemployment in the US, yet everyone still feels kind of bad about the economy, so that's interesting. And as you look at 2023, in the first quarter, we've had an incredible stock market recovery with a particular focus on technology companies and a real resurgence of interest in certain areas of technology. Yet where are we today in the state of investing? Angel and seed investments currently make up its smallest share of venture investment in a decade. It declined to 34% of all deals made in Q1. Usually it hovers around 47%, and it dipped to 38.4% in Q4 of 2022. Overall, we've seen a globalization of interest and investment in angel and seed investing and in VC overall. And in Q1, US-based companies raised about $32.5 billion, which accounted for 55% of funding, a little more than it had been trending. The data is all from CB Insights. But overall, that globalization is something that Antler leans into heavily, as you'll hear in this session. We've also seen a change in the mix of investors. Non-traditional investors' deployment to VC has hit a 20-quarter low. Obviously, they were the big news in VC only a year or two ago. And those crossover and non-traditional investors brought a different flavor and a different ask to founders. That's an area where Antler's experience and know-how with founders truly dedicated to the early stage VC space has come into play. And that's the kind of investor that we strive to be. And while that total level of capital invested has gone down over the past several quarters, it started to stabilize. So that's an interesting counter trend to what we had seen over 2022. When you think about fundraising among traditional investors, 2023 has been kind of abysmal. Just $11.7 billion was raised in Q1. Yet at the same time, you see heightened interest in moving to early stage. When you look at that capital crunch that's been caused by the withdrawal of non-traditional investors and that difficult exit environment as well that we've seen for later stage companies, mature startups have really been subject to increased pressure. But it's also meant in a more difficult economic time and in sustained pressure time that new innovative potential founders have come into the mix because they have less to lose and because they see the opportunity. In contrast to what we've seen in the overall space of VC, you see accelerating entrepreneurship around the globe, and you see innovation led by transformational technology. That impacts every single industry. As you look at some key themes for investing, they're generating new opportunities, both for founders and better opportunities for investors seeking more reasonable valuations than they've seen in the last several years. So I'm pretty positive about the state of VC today. We know that prior downturns have led to some of the best vintages and the best opportunities in VC. And in particular, as you think about the stage in which Antler is focused and that early stage overall, it's an incredible time to be focused on some of the key themes that many investors are looking to understand better. AI, healthcare, cybersecurity, climate, transition, energy, and the list goes on. With that, I'd love to turn to Magnus and let him talk some more specifically about where Antler is focused. But I'm really excited to be with you all today and to host this discussion on where we see the markets and VC headed. Thanks. Over to you, Magnus.
Thank you, Sheila, for a great introduction. So Antler, as many of you know, is focused on backing great founders from day zero. And I think one of the things that Sheila was talking about that we see very clearly is that while the macroeconomic environment is more challenging, the opportunities to innovate and create great companies is bigger than ever. If we look at the Antler data for founders, if you look at Q1 2021, we had 2,500 applicants globally. If you look at Q1 2022, we had 10,000. If you look at Q1 2022, we had 25,700 founders applying to be part of the Antler program. So literally in a matter of 2 years, we've 10x the amount of people who want to come and build companies with Antler. I think part of that is obviously Antler being a bigger platform and a stronger brand name, but a lot of that is also a tremendous amount of people seeing great opportunities to start new companies at the bottom and not at the peak, and people seeking to solve some of the great opportunities that are out there today. So that's a little bit about kind of what's happening on the Antler side. If you look historically, just add on what Sheila said, the best time to build new companies has been just after peak, and we don't know whether 2022, 2023, 2024 will be kind of the macroeconomic bottom, but we do know that 2021 was a peak, which means that we're after the peak. And historically, if you look at Fortune 500 companies, about 30% of them was actually created just after a peak, which only represents about 10% of time. And if you look at some of the biggest tech successes out there today, they were all kind of started just after the dot-com boom or just after the global financial crisis. So we do see that the companies being created last year, this year, next year are probably more likely to succeed than many of the ones that were created leading into the crisis, leading into the peak. Now, why is that? Well, there's a few different reasons. So I think the number one reason is access to talent is bigger. So the ability to form very strong co-founder teams and hire really great people into the beginning of building a company is much bigger when the economy is a little bit less heated, particularly within tech. The other reason is that there are less competitors that are purely capital fueled. So when you see the economy approaching a peak, a lot of interesting behavior is going on where you're actually competing against companies that fundamentally are not that good, but they will still grow because they're buying customers. So today you actually see companies creating better capital structures, more cost-conscious companies that I think are very ready to kind of grow into the next wave of growth. So that's a little bit about the short term. If you look about the opportunity of innovation long term, there are similar kind of positive trends. We live in, I think, what might be one of the biggest platform shifts we've seen in a long time with artificial intelligence. Obviously, you all know about the tremendous innovation that happened around when the computer started becoming a commodity that most businesses and people could buy. That was a big wave. And then you all know the companies that was created around the mobile revolution when a lot of technology started moving onto mobile. You all know prior to that, what happened when the internet came, obviously a lot of interesting companies were creating during the peak, which didn't survive, but the one that were creating just after the peak did tremendously well. And obviously also around cloud technology. And just to quote the CEO of Google, what we're seeing within artificial intelligence right now might be the biggest innovation in civilization since the invention of fire. And it's kind of tremendous to think about the opportunities of value creation that will happen with that platform shift. On top of that, we live in a world where customers are truly becoming global. We see companies out of anywhere really being able to access companies and customers all across the globe. If you look 100 years back in time and you look at the airline industry, for example, it took them 68 years to get 50 million customers. It took OpenAI 2 months to get 100 million customers. It took Pokemon Go 14 days. So you can access companies and customers all across the globe, whether you're a B2B or B2C business these days, which means you can scale much faster than before. On top of that, the cost of building has gone down drastically. So as new APIs, new platforms are being built, the cost of opening up new markets for selling, whether you're a consumer tech company, B2B company, or a deep tech company, has gone down drastically. So for example, the last business that I built, Zalora.com, was an e-commerce business. When we had to build a new market, we had to build a payment system, logistics network, warehouses, we had to build our own server park. When you're building a business today, you can actually plug into a lot of these services. That means that you can open up new markets very rapidly at a much lower cost. So I think the combination of us just being after a peak, the big platforms shift we're seeing, how the world is globalizing, possibly outside of China and Russia, and how the cost of building has gone down. It's just probably the biggest opportunity ever to start new companies, and that's what we're focused with in Antler, finding incredible founders, backing them from day one, and the quality of the founders we get and the percentage of the applicants we invest into is improving drastically every day as Antler is becoming a more popular platform. So thanks a lot for joining, and with that I'll hand back to Sheila. Thank you.
Thanks, Magnus. I know a few people have messaged they're having some audio issues. We're reaching out to you to try to help out. While we're working on that, we'll move on and hear from some Antler partners on trends they're seeing on the ground in 4 different continents. Let's start with Europe. Today we'll be hearing from Dr. Christoph Klink, a Berlin-based partner with Antler, who co-leads investment operations across Central Europe and works with diverse founders across the broadly distributed pool of talent in the region. Take it away, Christoph.
Thank you so much, Sheila. It's a real pleasure to be here. Looking forward to discussing and sharing a bit of what we're seeing across Europe. We actually took the opportunity just last week when we gathered our portfolio in London to take stock and look at what we believe will be a new generation of tech founders across Europe. And what we did in order to actually figure out where we stand and where we're headed is, first of all, look at the environment around us. When you look at the last decade in European tech, you'll first and foremost see it has been a phenomenal place and phenomenal time to be there. And secondly, you'll see it roughly breaks down into 3 distinct periods. There's anything that happened up until 2020, then there are the years of 2020 and 2021, and then there's anything that happened in between 2022 and now. And these 3 periods have started out with pretty much steady growth with regards to the number of companies being built and the funding going in. We've seen European venture grow by 20x in just a decade. And at the same time, we've seen the more mature, grown-up scale-ups emerge as a real part of the real economy, so really becoming a job motor, an engine of job creation across Europe. Then 2020 and 2021, we have seen many phenomena that I think we now are all aware probably were peak behavior. We've seen 84 new unicorns in record time, a number as high as we've never seen it before. We've seen very, very large funding rounds happening, up to $2.8 billion US dollars. And we've seen companies need as little as 1.6 something years, so just 13 months in order to actually reach unicorn valuation. And then from 2022 onwards, things have changed once again. We've seen, on the one hand, a cool off. We've seen only 2 new unicorns net coming out. So we've seen 45 new ones, but 43 have actually dropped from those ranks. We've seen venture investment overall down by about 25%. And we've seen, those are just the reported numbers, and we've seen more than 40,000 layoffs happening across the European tech ecosystem in a very, very short time. But at the same time, the earlier you look and the more you look into early stage founding and funding, you'll see that the ecosystem is actually quite resilient. Valuations are pretty stable, activity continues to be high, and we see a record number of founders that are actually starting out. And in exactly these periods of disruption and change, we believe that founder focus is more important than it has ever been. And therefore, we've actually conducted what I believe is one of the broadest studies in European tech founders. We've looked at over 840 unicorn founders over the last 20 years. We've looked at 72,000 people who've applied to become a founder together with Antler. We've looked at the 2,600 plus founders that we've taken into one of our cohorts, one of our residencies. So we've actually worked with them for a number of months. And then we've looked into the over 270 investments that we've made since 2020. And what we found are 3 distinct themes. The first one is the flywheel of startups breeding new startups, so those startup mafias, keep spinning faster and faster, and actually that's even accelerated by the downturn. Secondly, talent is incredibly broadly distributed across the continent and across all sorts of different boxes. Prestigious education and work experience may not be as important as we thought it is, yet tech skills are becoming much more important. And lastly, although the change is very, very gradual and very, very slow, we see the ecosystem becoming more diverse with regards to nationalities as well as with regards to gender. So firstly, looking at that flywheel effect, so startups leading to new startups, what we've done is we've chopped pretty much the time between the last big crisis, 08, 09, and today into 2, and looked at anything that happened before 2015 and after 2015. What you'll see is probably not surprising to anyone here on the call today. Before 2015, we've seen about a third of founders that are actually coming from the startup ecosystem. So they have actually learned the ropes in building and scaling startups. After 2015, all the unicorns founded then, we see 43, so close to 50% of founders that are actually coming from the ecosystem. And when we look at that new generation of founders that's starting out with Antler now, we see more than 2/3 of them actually have come from the startup ecosystem. And that's even accelerating as we see more and more disruption in the ecosystem. So we've looked at all the companies that are undergoing restructuring, and there's a bunch of them. And we've seen that for those companies that are undergoing restructuring, we see more than a 400%, so a 5x increase in the number of founders that are coming out of these organizations. So counterintuitively, things slowing down actually lead to new foundings speeding up and increasing in velocity. Then secondly, you'll all know those studies, and kind of we've looked at that also extensively. You'll see that there are distinct engine rooms that are producing great tech founders at a very, very high pace and high density. 40% of unicorn founders come from just 20 universities and 20 employers. And it's true that density is very, very high. But it also means that in the end, talent is way more broadly distributed. So more than 60% of the unicorns do not have a founder that comes from any of these 20 universities or employers. In fact, more than 350 universities and more than 500 employers contribute to that space and that group of unicorn founders that we see over the last 20 years. So for any investor, we have to look beyond those badges of honor. We actually have to understand the people and not just screen their CVs before they've actually started building a company. But what we're seeing very consistently is that the share of tech backgrounds amongst founders is steadily increasing. Anything that happened before or was founded before 2015, it was only every fifth founder of a unicorn. Now we're seeing after 2015, it's about a third of the founders. And in fact, over the last 3 years, engineers have been the job description with the fastest growth, more than 50% growth of founders applying to become founders of Antler. That is very, very likely driven by the nature of businesses changing, becoming more complex, becoming harder to build, and technology becoming more of an important differentiation mechanism. It's actually technologically more advanced what's being built and what's going to be built in that new generation of founders. When we look at diversity, we see that amongst the unicorn founders across Europe, it's only 39, so less than 40 different nationalities contributing to that. And the majority of people are building in their home market. So about 3/4 of founders are actually building in their home market. When you take the UK and Switzerland, which are clear outliers, out of that mix, you'll see that only every fifth founder actually chooses to build somewhere else. When we look again at that new emerging generation of founders that we're working with right now, we see 156 nationalities amongst them, and we see a much higher share of people that are actually choosing to build outside of their home markets. And then when we look at gender diversity, I think there's no other way of saying it than there's lots of work to still be done. When you look at the unicorn population, what you'll see is it's somewhere in between 0 and 6% of unicorn founders being women. That doesn't really change over time, and there's no country across Europe that's done a tremendously better job than anyone else. Yet again, when we look at that emerging new group of founders, we see it's a 5x uptick. So about a quarter to a third of founders that are starting out with us are women. And I think that makes us very, very happy and very, very excited about what's to come. In essence, when we look at all these findings, and there are many, many more, we'll share the report link separately. It's all online on our website. We're looking very, very happily into the future because we see there may as well be a very, very exciting time to come and a very exciting new generation of tech founders emerging from that crisis. Thank you so much. Looking forward to all the questions.
Thanks so much, Christoph. That was really great, and I look forward to some questions for you. But let's head to the US now for an update from Tyler Norwood, who's Antler's managing partner in the US. He oversees growth and geographic expansion across the market. Tyler?
Hey, everybody. Thanks a lot for being here. My name is Tyler Norwood. As Sheila mentioned, I'm the managing partner here in the US. So I oversee all of our operations and investments here in the good old United States. And yeah, excited to pull together some of the things that we're seeing on the ground here and share them with you. So this is coming from, we're on track to do roughly 7,000 to 8,000 applications to join our Antler residency here in the US in 2023. So we have a tremendous amount of insight and on the ground data at what's happening at the very early stages of venture capital and as well what's happening at seed. So we have a lot of companies that are raising capital right now. So wanted to give you guys an update on a few things that we're seeing that we think are interesting and exciting. So first is, I mean, as you guys have heard, venture capital is frozen. I think the easy news headline is that VC is completely shut down. I think it's actually more nuanced than that in reality. I would say that growth capital is largely frozen. So Series A and beyond, with the IPO window basically shut. I mean, we had a Mediterranean fast food restaurant IPO, which is giving some people hope that the window could open back up. But with the window more or less closed for technology companies, growth capital is sitting on their hands. We have multiple companies that are in the process or have thought about starting to raise Series A and have paused to let the macro environment sort of readjust. And what we're seeing is basically there's a repricing happening, and it's going to take a while for that to stabilize, and we believe growth capital will come back strong near the end of this year and going into 2024. But as that repricing happens from the public market, multiple valuations down into pre-exit, mezzanine, Series C and beyond, all the way down to Series A, there's a lot of uncertainty as to what the right price for these companies are. So for companies that are at that stage, we see a lot of continuing to be heads down, continuing to focus on profitability, and not a whole lot of fundraising activity. That being said, we don't see the same thing being true at seed. We actually have 14 companies in our portfolio in the US that have term sheets on the table right now. Those term sheets have come in over the last 2 or 3 months. So we still see a lot of activity at seed. What we do see is two things. One is valuations are coming down. So the last 2 years, we're seeing what we consider like really good companies, strong team, clear market, good traction. We're raising at a median valuation of 20 million. That's coming down to 10 to 12. And the second is firms are being a lot more selective. So we see there is a much greater focus on traction and actually proving that there's a real business here versus just you've got a great team and you've got a great idea. Here's all the money that you need. So ultimately, we think those are all good things. Seed is still active. Prices are coming down, which is obviously beneficial to investors. And we also think it's beneficial to founders. Personally, I don't think it's in the best interest of founders to raise a pre-revenue company at a $20 million valuation. It severely limits your optionality. It sort of sets a clock on figuring things out with very little options on what you can and can do in terms of pivoting and really finding product market fit. So we're happy to see these valuations come down. We think that it sets founders up for better longer term success by allowing them the freedom to continue to explore as they find product market fit. The second trend we see that's really fascinating is just geographic expansion. So the Bay Area obviously still leads in terms of total venture dollars deployed, but we're seeing an exciting expansion and a real group of thought leaders start to really lean into the idea that it is going to be possible to build large, successful, diverse ecosystems all over the United States, and that the venture model of everything exclusively happening in the Bay Area is starting to shift more towards an idea that we can actually build the top 10 largest venture ecosystems just in US cities alone. San Francisco will obviously still benefit by creating more late stage growth opportunities for the big super funds to invest in. And for founders and VCs, it's an amazing opportunity to stay where you are, not have to relocate to California, focus on other industries that may not be necessarily the focus in San Francisco, and ultimately create a really strong base of technology economic growth in other cities across the US. Next trend on sectors. So as all of you have probably heard, generative AI is a super exciting new sector. OpenAI, with its release of GPT-3 at the end of last year, has cascaded us into this huge explosion of innovation happening around generative AI. Everyone is still very unsure about what is generative AI, how do you capture value, what should you be looking for in deals, who are the right founders. Like, as a new area, it's very interesting to see everyone sort of asking these fundamental questions. So one of the observations that we have is roughly 75% of the deals that we're seeing now, founders coming into the accelerator program, deals that we're seeing at investment committee, 75% of them are integrating generative AI in some way into the business model. And that is informing our approach and our opinion about generative AI. And where we're starting to land is, yes, generative AI is an interesting technology in and of itself. But what we're seeing is it's actually becoming part of the technology stack in a similar way to other technologies that were made available off the shelf. If you go back to AWS, if you think about all of the UI tools like React and all of the Java tools that were built, we're seeing generative AI actually be applied in that sense much more than companies working on the underlying technology. And so the same way that just because a company uses AWS to run their servers, you wouldn't call it an AWS company. We're starting to see that just because a company uses generative AI in their stack, that doesn't make them a generative AI company. It does, however, add an entirely new suite of opportunities for them to solve problems for their customers, to scale their business in new and exciting ways, to improve their margins in new and exciting ways. So we're actually really excited to see lots of different companies building across different sectors, different business models, using generative AI off the shelf as part of their technology stack, and what we believe will be sort of a new wave of company composition that's made available with this technology, which I'll talk about at the end. And then the last trend I want to talk about is more demographic. So here in the US, Gen Z, I think the oldest Gen Zs are now in their mid-20s, all the way down to juniors and seniors in college. So one thing that we're seeing at the early stages of the venture ecosystem is a much larger percentage of founders are now Gen Z. And the way that they view the world, being totally the first fully digitally native generation in the United States, is very different. The brand affiliations and the expectations they have from the things around them are very different. And so ultimately we see that there's this huge generational shift happening, which is changing the brand affinity. It's changing the expectations that founders have with VCs. And ultimately we believe that it's opening up a ton of new opportunities for new firms, as well as new venture capital models to gain market share. So as you all know on this call, one of the really noticeable pieces of Antler is we are a different model. The way that we run our deal flow funnel through our residency programs, investing in founders earlier than other VCs traditionally have, working with founders in person to do our underwriting. We're seeing that Gen Z is really excited about this new proposition. And so we expected this demographic shift to continue to help support new models like Antler entering into the US, as well as we're seeing a ton of other stuff around new math, new focus areas, new sector focuses, new geographic focuses. All of that now has an opportunity to step up to the plate and play ball. And we believe in the next 4 to 5 years, the firms that have figured out new models that actually work will survive. And so lastly, I wanted to sort of share a prediction. So this is the first thing that we're not seeing, but we believe that these trends fill into, and we believe it's something that creates a lot of really exciting opportunities to be investing in early stage venture capital. And that is that we believe in this next cycle, we're going to see substantially smaller teams build unicorns. A couple of reasons behind that. Number one, if you look at growth capital, we're not sure how much of that will come back. But ultimately, we think that there's a new generation of founders who have seen the pitfalls of raising hundreds of millions or billions of dollars post-Series A that will actually reduce some of the demand for companies that are just consuming unlimited amounts of growth capital. That combined with generative AI, which we think is creating a technology stack that allows companies to scale and operate much larger businesses with much smaller teams. And then finally, the Gen Z demographic. So the way that Gen Z think about work, one of the things that we've seen is they're much more interested in working with small, agile, creative teams. They're really not interested in this sort of like our parents' style of work where I work at this company with hundreds of thousands of people and I'm sort of just a cog in a machine. So we see all these things converging into a world where we have much larger companies with much smaller teams. We're also seeing that supported by examples that are being made of publicly traded companies. So what Elon Musk is doing at Twitter, I think, is this really fascinating experiment to see, can we reduce the headcount of a company that's traditionally been quite large, and does the company still stay afloat? If that ends up working, if Twitter ends up sort of turning the corner and becoming a profitable company, I think it sets an example for a lot of other companies, both at the early stage but also at the growth stage, that, hey, we could actually build the same company we're building with a much smaller team. So that means less dilution for early stage founders. There's less capital needing to be raised to support hundreds of thousands of FTE head costs, smaller, more agile teams with better margins. And ultimately, we think that it's a really exciting trend that we're interested in continuing to lean into. So I have a slide here just to talk about the geographic piece and to kind of share with you guys what we're doing here in the US. So this is a graphic that shows the 3 hubs that we have currently: New York, Austin, Boulder. And we think about those hubs as being placed within sort of regional ecosystems. So New York in the Northeast, Austin in the South, Boulder in the Mountain West. And what we're seeing is we're not just bringing founders in from our residency from those cities, we're actually pulling founders from the entire region into these hubs. And so going back to the trend of building successful ecosystems in other markets across the US, we're really excited to sort of be at the tip of the spear of this trend. And what we're seeing is the buy-in and the interest from LPs, from local governments, from founders who have grown up in these different cities are really, really excited about having venture capital infrastructure, especially early stage, is supporting founders from day one, come into their cities and support them building where they're based, where they want to live, where they went to school, where they want to raise their family. And so this graphic shows where we're pulling founders in from based on our applications and the teams that we have funded, as well as over here. So this chart is Bay Area VCs dollars invested into other cities. So this isn't just domestic dollars. Actually, domestic dollars would 4 to 5x some of these numbers. What this is showing is the Bay Area is actually super interested in expanding into these other regions as well. If you look at the billions of dollars that are being invested in founders who are building in these cities, there's clearly interest from the super funds. And us being at the tip of the spear, to get these ecosystems to continue to grow, the most important thing is that founders have early stage, day zero support to actually launch companies. The more successful companies we can launch, the more jobs there are for people who want to work in tech startups, the more opportunities there are for people to upskill themselves, the more opportunities there are for downstream capital to invest in successful companies in these other cities. And then lastly, I'll just give you guys an overview of kind of the quality of talent that we're bringing in. So if you look here on the chart to the right, you can see that our application numbers continue to trend really positively. 2021 and 2022, unfortunately, were COVID era where we really got away from the co-founder matching. It was hard to do co-founder matching on Zoom. And so what this really shows us, going back to like changing expectations from founders as well as focusing on really, really early stage, is 2023, we have really formally introduced co-founder matching as one of the main reasons why founders would come and work with Antler. And you can see like applications have skyrocketed. So that trend of really solving a different problem besides just funding companies is enabling us to attract founders from the best schools, the best companies in the United States. It's enabling us to have a large enough pool of candidates to really select from the best. And we think it's compounding into a really powerful reputation builder as, hey, Antler is not just a VC, it is a place to go to find your co-founder, figure out what you want to build, and then receive funding all in one place. And as we continue to break through the media bubble in the US and educate more and more people about our model, we see that LPs are very excited about it. Downstream funds are very excited about it because we're ultimately creating better and more deal flow for them to invest in at their stage. And most importantly, founders are incredibly excited about it. So that's it for me, Sheila. I'm going to pass it back over to you, and thank you guys so much.
Thanks, Tyler. That was great. Let's go around the world and keep it moving and get to Bangalore, India. We'll hear from Rajiv Srivatsa, a founder turned investor who is a founding partner of Antler in India, where he oversees all of our India operations. Rajiv?
Thank you, Sheila. Good morning, good afternoon, good evening, wherever you are. It's great to be talking about India. Welcome to India. And I think there's a lot of stuff that's happened in India over the last few years. Many of it good, and I think McKinsey's CEO Sternfels talks about this the best. It's not India's decade and techade as we call it. It's actually India's century, and this he said in September 2022. What's really leading to this is 3 big drivers. One, there's a lot of push towards infrastructure and consumption to move India's GDP beyond Japan and Germany to actually get to number 3 in the next 5-7 years. And that's a big trend. And I'll talk about why that's happening. Second, building on what that GDP is doing is actually 2 very unique combinations. One is building from India for the world, backed up by a lot of experiences that India has and Indian founders have over the last 20 years, as well as building for India from India. And I'm going to talk about something very interesting that's happening in the last 3-4 years in India. The third is the founder and the surge of unicorns. There's a very new, resilient Indian founder. I've been a founder. I've raised millions of dollars for my own venture 10 years back. But today, the founder is way more mature than me, and I'm going to talk about the Indian founder for a couple of minutes. So without any further ado, let's get to the first story. So this is an article that Wired wrote around a year back. And they put this image, which is sort of depicting what is actually happening in India. There are agri-tech startups which are today getting to the Soonicorn phase. And there are people across the country who are actually using the power of the mobile phone. And what really has happened there is actually pretty unique. And something unique about this is GDP growth is not just coming from manufacturing. It's not just coming from services. It's actually backed by a lot of very important and interesting activity. So Morgan Stanley talks about this. But why is this boom happening? I'm going to talk about 2-3 specific data points on the big structures of when the GDP moves to number 3 in the world. One is the per capita moves towards a $5,000. When something hits a $5,000 mark in the GDP per capita, which sounds low for the developed world, but actually there's an inflection point in terms of the kind of consumption that's going to happen. India has always been very big on IT services and exports, but building startups towards the stock market, if you see the equity market cap, touching a $10 trillion mark is actually a pretty big number. Something that's very different in India, the growth story of the GDP versus China, and thanks to the report from Bloom here, is the huge amount on private consumption. And I'm going to talk about the private consumption in a bit, but that's a big number that's actually very different. Now, what has enabled this infrastructure? 4-5 years back, there is Reliance, which is one of India's largest private limited companies, which set up this infrastructure called Jio, right? And every single person in India, literally every single person now today, if you see on the road, if you see in villages, has a smartphone and is actually hooked to the internet. Why? Because the cost of data is surprisingly low compared to every other part of the world. And when you have so much data, when you have the infrastructure across top, not just tier 1 cities, but also tier 2 and tier 3, you get a massive data, usage. And that's really what's happened. Today, India is one of the biggest audiences for a lot of content companies like YouTube, but also even for the, bigger corporate companies like LinkedIn. And that's because there's just been an explosion in the last 3-4 years, which has been a seminal inflection point for India. It's not just the digital infrastructure, it's also the physical infrastructure. And here is where the government has made a lot of moves towards a push towards ESG and renewables. India is one of those countries that has not great roads, but the amount of activity that the EV ecosystem has seen in just the last 2 years has been a lot of push from the government as well as a lot of founders, right? Today, there are multiple startups that are probably unicorns. Just in the EV space, today, there are EV financing companies, there are EV OEMs, there's EV B2B companies. All of this is because there's a lot of push from the government towards renewables and EVs. And the next 10 years, we won't be surprised if it way overcrosses, some of the other sources of energy. So it's been both consumption and manufacturing led. Now, what does this mean in terms of, the kind of companies, the kind of business apps that India can build? And here is where, there are 2 big trends that we are seeing and we are very happy to be part of. The first one, which builds on what India has done in the last 20 years, India is very known for quote unquote cheaper software services. That was what, and I have done my bit before starting my own company. I was actually working in Infosys, which is very known for this. And in the 2000 to 2010, India was known for a lot of talent around this. Now, what that talent did in the 2010 to 2020 time period is went on and built some of these unicorns and big companies like Zoho, Freshworks today, which are unicorns, serving products to the entire world, right? So India today has a fledgling SaaS ecosystem, and the best case estimate here is $1 trillion in value in just the SaaS ecosystem. Now, can these SaaS solutions, not just horizontal and vertical, really extend to areas like climate and AI and Web3 is something that is still a question mark, but Indian talent proves that it can. One of our own portfolio companies, Bookie, sitting in India, is trying to service fitness entrepreneurs in the US, and there are hundreds of them, 100,000s of them, and has done a fabulous job. And we have been able to actually support Vistar's journey in building Bookie and actually raising a next round. And that's something that gives us a lot of pride and privilege. It's not just building from India for the world. India is also building a lot of platforms for India itself. This is almost like the TCP/IP moment for India and the Indian infrastructure. Imagine, today Amazon and Flipkart are 2 big behemoths in the Indian e-commerce industry. But why should only two big folks, get all the value and all the supply and all the demand? What if India builds an absolutely open network for digital commerce where anyone can come be a supplier, anyone can be a logistics provider, and anyone, even in tier 2 and tier 3, can actually be a demand, and the commissions are not what some one behemoth decides, is actually what the platform allows. Just similar to that, India is building, a lot of data platforms across healthcare, across logistics, across education, and this has enabled a lot of startups to start. And today, finance is the first vertical that's taking off because of this. Today, this year and the next year, UPI, which is a seminal moment for Indian finance. Every single person in India uses this and is actually crossing the number of transactions of Visa and MasterCard put together next year, right? Which means that the amount of volume of transactions that flows through this ecosystem is really, really a lot. And the first vertical that is becoming $1 trillion opportunity, and the number of unicorns in India probably is the highest, is fintech. And we've also been, just an example of a company that Antler in India has funded is Bold Finance, which sits on top of this ecosystem to really try and democratize gold loans in this country to tier 2 and tier 3. And, even in the case of Bold Finance, we've been extremely privileged to actually have, Durgesh and Nikhil move to the next stage along with Antler. And this is a person who literally was working in McKinsey, was figuring out should he start, should he not start, came to Antler, and we've been, extremely happy to work with Nikhil and do this. So is this only, building from India for the world? Is this only building from India for India? But who is actually doing this? It is a pool of talent. It's a pool of founders who have been given a huge boost in the 2021, upswing of the markets. Today, India has 100 plus unicorns. It's anybody's guess how many of those unicorns still are unicorns. But what that has done is a different level of confidence. When I started up, maybe after 10 years of work experience, 10 years back, my confidence level, if it was X, today the founders that we see are much younger, much more confident, and are able to take much bigger risks. And that's phenomenal for the ecosystem, because that means that Indian founders can actually build the next stage of companies. Now, of course, it's not just about the 2021 surge. It's also about building something which is resilient. And what we see in the ecosystem today, especially in the last 9-12 months, where there's been a funding pullback, is that founders are more resilient. People are also taking layoffs in a much, much better phase than 4 or 5 years back, when people would actually fear the word layoffs, right? Now, can this ecosystem actually get the kind of exits? Can this ecosystem get the kind of IPOs? A lot of founders are building for that, but it's still a question mark that still needs to be addressed. And only time will tell. But we at Antler are extremely happy to partner with the Indian startup ecosystem, and it gives me and Nitin, my partner, a lot of privilege to do that. Happy to take any questions. Sheila, over to you.
Thanks. We'll hold questions to the end. We may run a few minutes over, but we'll try to make it efficient. We want to make sure we make it to our last stop, South America. We'll be hearing from Carol Strobel, the founding partner of Antler in Brazil, with more than 20 years of experience in tech investing. She's a pioneer in Latin American VC and a board member of publicly traded companies there. Carol, over to you.
Hi, everyone. I'm Carolina Strobel. I'm talking from São Paulo, and together with Marcelo Ciampolini, I'm one of the MDs in Brazil. It's a pleasure to be here with you and update you a little bit on the Brazilian ecosystem. And I thought it would be good to show you a little bit how the economy is. And Brazil is now the 9th largest GDP of the world. It's the largest consumer market in South America. Its geographic territory is larger than the continental United States, and we are home to more than 210 million people. It is a democratic country with continental measures, with a single language and a single law system. We are tech-savvy, early adopters. 97% of the population has access to a smartphone. 71% has computers. 66% are part of an online social network. We have a very dynamic and innovative ecosystem, and we have rock-solid foundation for the next generation of the game-changing startups. Now is the best place to invest, and we are one of the hottest places in the world, and because we have enormous opportunities and problems to be solved locally, and technology has not yet tackled that. So there's still a lot of space to build technology companies in Brazil. We're going to talk about some industries like fintech and health tech and biotech today, but we have a huge internal market. Brazil has the potential for the creation of solutions and business for the internal market, but also that can scale globally. There are many talents in Brazil. We spoke a lot about that here in the previous presentations. These talents are now available in our cohorts here in Brazil. We had an average years of founders expertise of 13 years. So many experienced executives are looking for opportunities. And also the new technologies, Magnus has spoken a little bit about this as well, and so many others. I think all regions are looking into this right now. But AI is very beneficial for a region where many business functions are highly people intensive due to cheaper labor costs. And that's exactly the case of Brazil. There is a lack of automation, and now it's the time to help these large companies, the large corporations, to get some tools, some AI tools, and our startups are being created using AI by default. So they are able to provide those tools and to solve those problems for such companies with legacies that need AI solutions, right? So more than that, the venture capital ecosystem now has a lot of dry powder sitting out here. The Latin American experienced a funding boom from 2019 on, with record venture capital inflows in the region. We have around $2 billion that were raised by the Brazilian venture capital companies, and not even counting the international funds that want to invest here. It's a great time to allocate money in Brazil, in the Brazilian innovation system, perhaps one of the best we ever had. We don't have a lot of places sitting out there with more than 210 million people where you can actually build big companies that are focused on being local, but also able to scale globally, and that's the case of Brazil. We're going to talk a little bit about fintechs as well. So fintechs are booming and will continue to boom in Brazil. One of the main reasons is that the Brazilian Central Bank has been highly proactive in introducing new regulation and licenses with lower capital requirements to increase competition in the financial system. This is changing the industry in Brazil. Monopolies are falling, and new entrants now have the opportunity to dive into untapped profit pools. We also have the Brazilian Central Bank welcoming this new digital entrants and actually allowing a whole next wave of fintech winners in the country. Additionally, Brazil's real-time payments network, so if you're a fintech lover, you probably heard of it, it's called the PIX. It has already outpaced India's equivalent UPI, which was launched a few years earlier. So sorry, Rajiv. But this Brazilian real-time payments network, the PIX, runs over a free network rolled out by the Brazilian Central Bank. It's available 24/7, can be used for both consumers and merchants, and it's internationally recognized as one of the greatest innovations in the industry. The Brazilian Central Bank is now in the process of rolling out additional features to such network, which includes automatic debit, installment functionalities, and international remittances. So fintech startups have a compelling opportunity now to build on top of that, or even to solve the gaps that we have in the PIX functionalities. For health techs, it's like as if COVID has placed a huge spotlight on a scenario that everybody was talking about for some time. So the pandemic showed the weaknesses of the Brazilian public health system, which is called SUS, and it was in the brink of a collapse in many regions during the pandemic. So Brazil is a large territory. Some of the regions are extremely difficult to reach and to provide medical support. At the same time, we have seen in the private health sector an unprecedented business boom, and there is a race for the consolidation of hospital chains and health plan operators. And this reflects a market expectation for a growing demand generated by the aging of the Brazilian population. So considering all the budget restraints we have in the government, it is unlikely that the government will be able to meet this demand. And there is a lot of space to be creative and increase health business models efficiency. Just wanted to talk to you about two of our portfolio companies. Estralo is one of our local investments, empowers primary care workers to manage patients with musculoskeletal disorders by leveraging their existing infrastructure supported by a scalable digital clinic. This company was founded by an experienced dev and an PhD And it was a great example how we can help actually, health in Brazil. For tech and climate change, I can't talk about Brazil without saying something about that. There is a huge natural potential in Brazil to become a key player in the global decarbonization process and driving sustainable, inclusive growth. Brazil has a natural opportunity to be a leader in the climate conservation, and we have made an investment here. It's Mabe. It's another portfolio company that combines technology and nature to create new materials from plants, such as bioleather and bioplastic. I hope I was able to introduce you to some of the areas we're looking into Brazil. You're very much welcome to visit us in São Paulo. There's much more to see.
Thanks so much. I'd love to turn it right away to questions. Magnus, we've had a pre-submitted question about Antler's expansion where it's headed in the future, growth, geography, asset classes. Let me turn it to you first.
Thank you, Sheila. Basically, Antler is now present in about 27 cities across 6 continents. Most of the world's most important tech ecosystems outside of Silicon Valley. There are a number of other cities we are interested in, but mostly we will grow from where we are. So, for example, in Germany, we're now launching Munich. In India, Rajiv is looking at a few more cities in India. In Africa, we're on the east, and we're looking at potentially going west and so on. We're obviously looking at Tel Aviv. So there are, a few other markets we're looking at, but a lot of that will happen growing within. So a lot of the core focus on finding great founders is really doing more and better where we are, creating a better platform, being an even better partner to the world's best founders, and then we'll grow a bit organically based on the locations that we're already in. But we are very excited about our current footprint. Now, if you look at asset classes, we are, very happy to announce that we closed our Series A to C fund, $285 million. We can back now founders all the way up to Series C. We'll keep launching Fund 2s. The Fund 2s that we're closing now are about 3 to 4x the size of Fund 1s, which is great to see. Investors continuing to back us and more investors coming on board in the second vintage of our funds. And we'll obviously launch our second later stage fund sometimes over the next couple of years. And then at some point in time, we launch our growth fund. So the whole idea is we'll focus on being the best at finding incredible founders at day one and being a great partner to them. And then following up alongside other tier one investors, taking our pro rata right all the way to their exit so that we can be a great partner to founders on their entire journey. And at the same time, create great opportunities for our LPs to come on board globally or in a specific geography or at the asset class in which they find most interest to invest. So thanks a lot for that question.
Thanks, Magnus. Tyler, someone asked, with all the layoffs that have been happening, particularly in the tech space, the US being where it's been felt the most, how is it affecting your recruitment of founders? Are you seeing more people come in and general sentiment in the startup community?
Yeah, it's a great question. So obviously a ton of layoffs happening in the US. I mean, I think 2 trends. One is, like I talked about in my presentation, we're going to see companies naturally gravitate to just being smaller and more lean across the board. So from Google all the way down to, growth stage, early stage companies. And yeah, on the new talent side, it's filling the coffers with, potential candidates who can start new companies. So I would say that, it's probably impossible to ever know this true number, but anywhere from 10 to 25% of the people who are affected by these layoffs are going to choose to go and start their own company, especially ones coming from big tech who are leaving with severance packages. They have, 3 to 6 months of their mortgage covered to dive in and build something new. So yeah, we think that's going to be a huge feeder into a new wave of companies that are building at the beginning of this new cycle.
Thanks, Tyler. Rajiv, as we look at the macro background in many Western nations being relatively dire in the developed markets, it's affecting whether people want to start businesses, but also bringing new people in. What impact are you seeing on sentiment for Indian founders? Obviously, you gave us a much more positive backdrop in India.
I think 2 aspects. One is something related to what Tyler said, but also more importantly, what's happening is because the bigger companies don't have any growth opportunities. Even the smartest people, not just the ones that were laid off, the smartest people don't have anything to do there. So they're actually moving out and starting companies. And that actually is even better. And two, only the CDS founder is coming today, because 1.5 years back, it just became very difficult to, differentiate between 3, 4 people with the same idea. Today, only the person who wants to really build something for the next 10 years is actually starting up. The other person is staying back and doesn't want to take the risk. And I think that's actually beneficial. And maybe some sectors are seeing lesser activity, but overall, I think in India, we're seeing pretty much a lot of early stage activity, and that is quite helpful to us.
Thanks, Rajiv. Turning to Latin America, Carolina, do you think in 5 years' time, similar to some of the developments we've seen in India, actually, you'll be building for the continent or for the world, as we're seeing in other geographies, rather than just for Brazil, for example?
Absolutely. So the ecosystem, of course, it's evolving in Brazil, but we have already some examples of unicorns that came out of Latin America / Brazil, Gympass, Happy. We are seeing this happening. We see in the cohorts that the tools are being created with a global mindset. We have the right fundamentals. It's just a matter of time. Yes, we're getting there.
Thanks. Maybe one last question. No, we've run over, but quickly for Christoph. Europe is so interesting. Over the past few years, we've seen governments leaning hard on investing through sovereign initiatives, BPI in France, the British Business Bank. Do you feel the private sector is keeping pace with these sovereign initiatives? How do they change the dynamic?
The very interesting question. I think, first and foremost, public actors have to make sure that the environment is attractive for both founders and investors, because anyways, what private investors will invest will always be a multiple of what the public investor can actually put in. So that's what's going to move the needle, whether they get that right or not. When you look across Europe, I don't think there's one answer. I think it's much more nuanced, because you'll see it has become so decentral. There's dozens of cities that have bred unicorns, very successful companies, and you'll see that those programs will differ on a national level, on a federal level, sometimes on a city level, right? So I think across the board, kind of the big strides that have been made, European Investment Fund, for instance, I think those have become very successful and reliable partners to private investors. And I think they are a big contributor to where the ecosystem is today. But one can't kind of thrive without the other.
Thanks so much. With that, I want to draw us to a close. We've had a wonderful opportunity to speak to all of you. Thanks for spending time with us, and thanks for all the questions that got submitted. We'd love to have you join some upcoming Window into Progress digital events next Wednesday, June 28th. We'll have Under the Hood, how Antler sources and accesses great founders. And on Tuesday, July 11th, join us for Companies to Watch, breakout startups in Antler's portfolio. So thanks, everyone, and see you again soon.